Every week is an adventure. This week is looking like it's going to be no different and always full of excitement. We've got a really packed show today, so please make sure to stay tuned. We're going to talk about the major economic events going on this week, why you should pay attention, the things I'm doing to take advantage of it, and the things I'm not doing so I don't get in trouble because of it. So with that, remember, every day in crypto is an adventure. Make sure to like and subscribe now if you want to stick around and see other shows, because we put out shows pretty much every single day in the morning, sometimes around lunchtime, to make sure that you have all the latest and greatest of what's going on in the crypto world. So right now, the next thing up is we have a couple of major economic events happening this week that we have to talk about. And so before we do that, let's take a look at where Bitcoin is right now. I say Bitcoin because Bitcoin's the king of them all. Some would argue XRP is, but it's not there yet. Possibly in the future, but not today. Right now, Bitcoin is up against that major ceiling of resistance. We fell through that floor of support a couple days ago on March 9th. We stayed below there. We closed a candle above the 84,000 mark just ever so briefly. The next day, we faltered back down, and here's where we are. So to me, right now, we're fighting this ceiling of support. We're fighting right against that ceiling of support. Until we can break through that, obviously it's going to be hard to go through, but it's a tough level because when we fell through here and closed a candle on the 9th, that was the first day we've actually ever closed a candle below 84 cents that went above there. And so now it's a very, very strong ceiling of resistance, and we need to flip this, get above this to start seeing some good upward momentum. But until then, it's going to rely heavily on the data and what's going on the planet. So with that, look at where we've come. This week has been tough. This month has been tough. 20, 30, 40% declines in a lot of these altcoins. A couple of them seeing wins, but those are few and far between. These are not ones I typically hold, so I did not benefit from that. And for the most part, everyone got hammered in the last month. Last week, a lot better. A lot of rebounds happening. XRP up 11.5%. CASP up 24%, XLM 6.5%, Cake crushing it 62%, SUI 5%, Jupiter. Nothing crazy, no astronomical wins, but it is a positive movement in the right direction. Now, why is all this happening? Well, let's look at the economic calendar. First up, today was U.S. retail sales this morning. I'm putting this out around lunchtime on Monday, March 17th. And if you look, it was supposed to come in at 0.6. This is retail sales. So this is how, do we increase retail sales or do we decrease them? We actually increased at 0.2%. Well, that's significantly under where we expected to come in. So that's good for, data. It's bad for the economy, but it's good for data if you think cheap money is going to turn this market around. Now, remember, everything I'm saying is not financial advice. I am certainly not your financial advisor. I'm just talking about the things I'm doing in education and letting you know, what's going on in the world of crypto. And right now, what's going on is we're waiting for, quite frankly put, bad economic data that will help the Fed lower the cost of money, make sure there's more disposable income in people's hands if they have to pay less for debt, and there's a search for that, riskier investment to replace the 5% they were getting in their checking account right now. Because as the Fed drops their rates, banks will lower their rates, prime goes down, the cost of home equity lines of credit goes down, auto loans go down, credit cards go down. And you're not drowning in that cost of money. They're going to look for more places to put their money. So that's why everyone's kind of hoping for, increased monetary supply, increased M2, and decreased cost of borrowing money. This week, housing starts, pretty big indicator of construction jobs. The more housing starts, the more construction's needed. The less housing start, the less construction jobs are needed. And construction jobs are often thought of as the base of the job market. And that's an indicator, a very strong indicator of what the market's going to do. So again, we're expecting 1.38. If we get less than that, it's going to bode better for cheaper money in the Fed dropping their rates. If it's more than that, it's going to be a surprise. Again, that surprise would be bad for the market and bad for crypto. The big news this week is the Fed meeting. The Federal Open Market Committee's meeting on Wednesday. It's actually Tuesday and Wednesday. It concludes on Wednesday, and then they gave the rate. They gave the rate decision. Did they lower the rate? Did they keep the rate the same or did they raise the rates? And right now it's baked in to this market that the rates will not be changed this go around. This is the CME Fed Rate Watch. They're right now we're at 4.25 to 450. So that's 4.25 or 4.5% of the cost of their money right now. That is pretty much either the overnight rate or the rate at which banks borrow money. So they're not predicting any change in rate this time. The important thing is not so much in the rate change because it's pretty much baked in. Now, if the rates do go up or down, it's going to shock the market. And if they go up, if the Fed says, listen, we're worried about inflation, we're raising the rates, it's going to have a very quick effect on the markets. I think the markets will react negatively to this news, and they would, that you're going to see the Dow, the S&P 500, the NASDAQ, in my opinion, drop. You're going to see crypto prices fall, and they're going to fall fast. Now, I don't know if there's any connection between this and the big whale making a $338 million 40x leverage trade shorting the market. If that person thinks that the Fed's going to raise the rates, yeah, that would probably been a good bet. But I don't think that's going to happen. I don't think the Fed's going to raise the rates. I don't think they're going to lower them this time either. If they lower them, expect crypto to just go up. I mean, it would be depending on the language from the Fed, it's going to really drive crypto prices up, in my opinion. Now, doing something about that right now, it would be speculative. If you think rates are going to stay where they are you doing anything different in the market? We're going to talk about that in a second. But before we do, you've heard a lot of talk about M2, and that's the supply of money. M2 takes M1 and M2. I mean, I think they define it right here. M2 consists of M1, that's small denomination time deposits, less than 100,000, less IRA and balances depository institutions. It's also balances in retail MMFs, less IRA and CUG balances and MMFs. Seasonally adjusted M2. Basically, it's your cash money that's you can easily get a hold of in banks and other institutional deposits. So it's really the money that swirls out there and the money that people have access to pretty quickly. And as you can see, M2 dipped and it's going back up. Well, there's a bit of a delay between when it goes up and when it flows into crypto. But there's been a very strong correlation between the two, and we're seeing this go up and up and up in the last couple months. So a lot of people are speculating that because there's more M2 supply, that the market's just poised and on the sidelines, ready to go and ready to jump in and buy some different investments and put their money at risk. And everyone's going to be competing. The stock market's going to be competing for that money. The bond market's going to be competing for that money. And so is the crypto market, real estate market, and other things. So it'll be very interesting to see how this plays out. Now, a lot of people talk about the DXY, the dollar index. The weaker the dollar, the more likely that people are going to look elsewhere for investments. Then they don't want to hold the dollars. The dollar's worth less and less. It typically happens during inflation, but also typically happens when there's an imbalance of supply. But we're heading towards monetary. It's all lining up very well, in my humble opinion. It's all lining up very well. You're going to see a lot of this economic news, if it doesn't come in as expected, or they keep predicting lower on jobless claims or on housing starts or retail sales, which retail sales came in lower than expected last week. Consumer price index, or a very important inflationary measure, came in better than expected. When I say better, there was less inflation than we anticipated. Same with the producer price index, less inflation than we anticipated. So that slowing of inflation is what the Fed is looking for. And that's what's going to help make their decision. Now, I've heard a lot of talk about quantitative easing. You are not going to get quantitative easing this year. They might reduce the tightening. And what that is quantitative easing, or quantitative easing is when they buy mortgage-backed securities or T-bills or long-term assets to help the price of those go up, which helps drive the yield or the interest rate on that money down. And that's how they help drive down rates. Now, we've had quantitative tightening for the last couple of years, which is when they sell those assets on the books. And trust me, they still have $6 or $7 trillion of assets to sell. So I don't think they're going to stop that anytime soon. They have been slowing it down possibly, but they're certainly not going to start buying them again unless something catastrophic happens in the market. And when I say catastrophic, I'm talking about COVID or a banking, issue like we had in 2008, or a crisis of some way, shape, or form, or maybe even a major war. But that being said, I hope we don't have any of those things, and I hope we continue to bring down the quantitative tightening, which is going to help the rates of long-term assets like T-bills and mortgages and things like that. And when people are happy with the rate they pay for their money and they have more disposable income and more money in their banks, they're more apt to buy investments such as crypto that have a higher risk typically than, say, a T-bill, a treasury bond, or even a stock. So until that happens, we're going to see us float around. We need not a catastrophic, but right now the crypto market is stalled out until more money gets injected. And if more money doesn't get injected, you're going to see this slowly falter over time until there's an injection of capital or cash, because a lot of people don't have dry powder to buy the dip. I've been buying the dip in very small amounts because I'm really waiting to get the bottom of this range. I still think, looking at liquidity maps, look, the easy grab is to go up. The easy grab of liquidity, this is a 7-day, the easy grab of liquidity is to go up to 85, 86,000. But there is plenty of liquidity down at the farther marks. These shorts would get liquidated at 85, 86,000. All these shorts would go away in that case. Now, if it dips down here, it's going to take these longs. Then we could really propel up. So I think there's a strong indication that the market still has room to run down. It's just looking for a reason. The second there's a reason, I believe the manipulators are going to push the market down, what magic they use to push the market down to grab this before shooting up and grabbing the rest of those shorts that they'd like to liquidate so the exchanges don't have to pay them out. Not saying that the exchanges are manipulating, but someone certainly is playing the market to their advantage with a large amount of capital. That being said, this is what I'm doing about it. If I want to go long, if I think Bitcoin, if I want to do a speculative trade, a gamble on the Fed meeting, I could say one of two things. I could think that the Fed's going to surprise us with a rate increase, in which case I would short the market. I'd do a low leverage short of Bitcoin if I believe that was the case. I'm not telling you to do that. I'm just telling you what I might do. If you want to trade and you want to trade with leverage and you're experienced, before you do any of these things, make sure you understand their risk. Make sure you read all the terms of service, all the disclosures, all the disclaimers, and get some education before trading. But if you're comfortable with that and you're going to trade, check out BTCC. I got links down below. And that's one thing you can do, is long or short that market. The other thing you can do, if you want to take emotion completely out of the game, I talked about something I've been in for over 2.5 years. It's EasyBot. Now, EasyBot is not the sexiest, coolest, highest return bot out there, but it's been very consistent for me for many years, 2.5 years. They've been in business for 3 years. And it's not an exchange. You don't give it your money to trade. You keep your money on your exchanges. And this is software that, through an API that you set up, will send buy and sell signals to your exchange to trade crypto on the spot market for you. And I did in my last video, I set these bots up on Thursday. I posted the video on Sunday or Saturday. And in the first couple of days, this doesn't seem that sexy, I'm sure. I got where's my calculator? $11.86 return. Well, let's look at that. Not the sexiest return, $11.86. I have $3,194 in these things, and all my money is not at risk because I'll show you how it works in a second. But if I take that, that's a 0.37% return. Okay, that was over 3 days. Well, let's say 4 days. Now I multiply that by 365. I get about a 33% annualized return. And that's only in the first couple of days I'm annualizing such a return. Now, this return is not indicative of future results. Past performance can't be relied upon for what's going to happen in the future. But typically, I look for about a 0.5 to 1% return a week. Sometimes I get 11, 12% in a week when the cryptos skyrocket. But typically, if I get a 0.5 to 1%, I'm pretty happy. A 1% return a week, that's 52%. A 0.5%, what is that? 26%. So somewhere in the middle there is where I hope to get. So it's not going to make you rich overnight, but it can put your capital at play, especially if you think these things are going up. And I'll tell you why. This is how this works. This is XRP. I started this on the 12th. It's the 17th, but I didn't trade until the 13th. So it's like 4 days of trading. But look, today, this was from yesterday. It was at $2.45. It opened a trade, $100. It went down a little bit, 2%. I opened another $100. It buys on the way down, unemotionally, without your input. You set aside a certain amount for the bot. It will buy DCA down and take profits on the way up. And if it keeps going up, it's going to lock in your profits. It's going to pull those out. You can compound them if you want, but it pulls those out for you and puts them into USDT. And so now you have taken out profits as this thing goes up. So I really like this because it takes the emotion out of trading. You don't have to be a good trader. It trades on an algorithm for you that's proprietary to them. And as you see, it just works. So there is a cost to this bot. There's a couple different programs. You can check it out. I have some links down below. And if you join my Discord, I have a free offer in the Discord. Anyone can join the Discord, and I'll help you get started on your EasyBot with some loyalty points for you. So join me in the Discord. Check out the EasyBot section. If you're thinking about upgrading your bots to pay bots, you get 45 days, 2 bots for 45 days. And if you want to upgrade your bots, I'll even give you a little something to help you out. There's no cost to sign up with EasyBot. It's free to start out. If you want to upgrade your bots to permanent bots, there is a cost to do that. Check it all out below. Not financial advice, not your financial advisor. So that's pretty much it. So be on the lookout for that Fed meeting and the words that they use about it. If they do raise or lower the rates, it's going to shock the market, and you'll see crypto go up or down depending on what they do. I don't expect that, but always expect the unexpected. Every single day in crypto is an adventure. And if you're not a subscriber, check us out daily. Hit the subscribe button, and I'll see you next time.